Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. Today is the 3rd of December 2013 and the time in London is 42 minutes past 5 p.m. In New York, 42 minutes past 12 p.m. Happy trading to you all. The title of the video is the first step to mastering a high probability trade. Alright? At the end of this video, one will be able to understand how one can identify a high probability trade and how one can trade a high probability trade. Alright? I'm going to focus on a specific high probability trade. Alright? There are many types of high probability trades. Alright? We can use patterns, to identify high probability trade, like Elliott wave corrective pattern. We can use also the predictive fractal pattern, to identify a high probability trade. We can also use market patterns to identify a high probability trade setup. All right. By the way, if you want to know more about trading setup or high probability trade setup, I recommend to traders the ebook that we call NYSE Trade, NYSE, November Yankee Sierra Echo, NYSE Trade on Amazon. All right. What is a high probability trade? All right. A high probability trade is a trade that will offer, a superior reward in relation to, the risk that we are taking. A trade that is likely to be successful, all right? A trade that has more than 70% of the chance, to succeed. These are a type of a high probability trade. But remember, every trade, contains a certain amount of risk. That's why we must adhere to the 5% money management rule, or at least apply a kind of viable money management in place. All right, very, very important. All right. In this video, we're going to talk about key levels, high probability trade setup. When we want to identify a high probability trade, the tool that we use is the market stable data. What is a market stable data? A market stable data, is something or a phenomenon, or an activity that remains intact in the market, that we can see that is valid on all time frame, that the market does not violate. This is a market stable data. All right? The market stable data that we're going to discuss in this video is that when a price is a market stable data, when a price goes above a very important key level, there is a high chance that the price will try to retest that key level, either on the 50-minute chart, on the hourly chart, or the yearly chart. If that key level is so important for the market, all right, you remember what I'm talking about. Stable data, the market will like to retest that level. This is a principle that the market will try, to fulfill all the time. It's a stable data. In this basic market, the price doing three things. The price either in a rising channel, in a declining channel, in a horizontal channel. It's a market stable data. There is another market stable data that we are discussing today, is that when a price goes above a very important, key level, there is a high chance that the price will try to retest that level. On the other hand, if the price dips below a major key level or a critical price level or a very important price level or an essential key level, a level that means something to the market is watching it, all right? The price will try to retest that level. This is the market stable data that we're going to discuss in this video. As always, my intention is that the video remains below 20 minutes. We have already spent 5 minutes, so game on, all right? The demonstration is not still down. I will demonstrate to you this market stable data, and it's up to you to see whether this is true or not. The first financial instrument that we're going to use to demonstrate this high probability trade, or based on a market stable data, as I explained to you, when we are looking for a high probability trade, we must work with the market stable data. All right? If you want to build a strong or a powerful trading system, your trading system must be based on a market stable data. All right? If you are designing a trading strategy, create your trading strategy around one or two market stable data. How do we recognize a useless trading tool or a useless trading strategy? We can recognize a useless trading strategy when we know that that strategy is violating, many one or two market stable data. That's how we know. There are some principles that the market is not violating. These are what we call the market stable data. People think that the market is chaotic, the market is messy, there's nothing that is working in this market, but there are few things that remain intact in this messy market that we can work with. So in a chaotic situation, so if you want to control a chaotic situation, we must look for at least one stable data. And if we find that a stable data, we can pull it out. A stable data, we can also refer to a stable data as something that is true. So if there is something messy in your life, you want to know the truth or the source or the cause of the problem. That's it. Once you find one stable data, something that remains intact in that messy situation, you can clear out completely that mess. The same strategy you can use to fix any problems. All right? So instead, not to fix the problem, but to solve the problem. Because if you are fixing the problem, you are just repairing it to a certain degree. But to solve a problem is to repair it 100%. So if you fix the problem, you have not repaired it 100%, so to speak. All right? But when we say we solve the problem, it means that we have find the root of the problem, and we have isolated that problem aside. Now we can deal with it. The same thing in trading. Why I was looking for market stability? There were a few years ago, I was going round, and I was saying to myself, if only I can find something that is working in this market, I will have I will start enjoying my trade. I keep saying this, but at that point in time, I did not understand anything about market stable data, market principle. I was just saying to myself, if only I can find one thing or one strategy, something that remains intact in this market. Why? Because I was on a 3-minute chart, I changed time frame, I changed my trading system, I changed my trading strategy day in, day out. One day I may use MACD, another day RSI, another day stochastic. I may look on the internet, I may go back to YouTube, watch videos, but still I'm going round. And I was looking for something that remained intact, something that is truth, something that remains stable. So when we are talking about market stable data, we are talking about something that is stable, stability, equilibrium. All right? So this is one we are discussing here. Price goes above a key levels, there's a high chance that the price will come back and retest it. This is about high probability trading setup. Let's get started. So let's go to the monthly chart for the Euro USD. All right. I'm going to bring on now more data. 1 second, please. All right. I'm waiting, all right? Waiting for my screen to respond. All right, because I have other software running behind. This software very often will make my screen, a bit, difficult to deal with. Okay, so my apologies to traders. All right, we see now, we can see the red line here. Okay, if I use the market stable data, which is the horizontal channel, which we can see that the euro roughly, okay, is in a decline, in a horizontal channel, yes or no? It's not hiding it. It's oscillating, okay, between these two levels, the black horizontal line here and this one here, yes or no, okay? But the red line is not exactly the median line of the channel, but we can say roughly it's in a zone of the median line of that channel. All right, so the red line is almost equal to the median line of this black channel, it's black horizontal channel, not exactly. All right, so also I know if you go to the yearly chart, the red horizontal line here is the high of the year 2012. It's a very important level. As you can see, okay, hold on please, let's go back to the yearly chart to verify that. Okay, here it is. You see, that's the high of, okay, 2012. Right? It's almost equal to the opening price. You can see it's above the opening price of, okay, 2011, and also almost equal to the closing price of 2000, okay, 2010, right here. Can you see it? Okay, the red line. So the red line is a very important level. It's almost equal to the high. It's equal to the high of 2012, almost equal to the opening price of 2011, and almost equal to the closing price of 2010. All right. Now let's go back now to the monthly chart. We are talking about market stable data that stated that if the price goes above a key level, there's a high chance the price may come and retest it. Here it is. See here? All right. It went above it. All right. 2009. You see? Now, in fact, we were talking about 2010, so let's come back here. It goes above it here. Look, the red line. It tried to retest it, yes or no. It went above it again, ran away. The price came back again to retest, okay, this key level. It's a very important level. Now it did below it. Now it went back again to retest it. Now we again sitting here. This is a high probability trade setup. Price goes away from a key levels. If the key level is so important, there is a high chance the market will try to retest that key level. If it goes above it, it will try to retest it. If it dips below it, there's a high chance that the price will try to validate it. Why? Because those key levels, they are behaving like a magnet, all right? Because they are so important, they represent like a true value of the price. So the price deviates away from its true value, there's a high chance that the price may return back to its true value. And they behave like a magnet. So the price goes far away from the level that everybody's watching. So if your attention, because all the attention is on this key level. If the attention is on one key level, this is the definition of the stable data that we are, or the explanation of it. If the attention is on one important key levels, and the price goes away from that key level, there's a high chance that the price will return to that key level. So if the market is watching that level, if the market put all the attention or their focus on that key levels, it gives that to that key level a very important value. The value goes higher if the market considers that level so important. So if everybody's watching that level, if all the professional, the hedge fund, the big institution are focusing or acknowledging that key level, that look, this level is very important, and the price goes above it, there is a high chance that the price will come back and retest that level. This is about, okay, the first step to mastering a high probability trade based on the market stable data. As I show you here on a monthly chart, this principle is true. I'm going to bring on now another financial instrument. This time, I'm going to bring on now Apple stock, a very popular stock that traders, okay, are trading day in, day out. Again, on a monthly chart, I use a currency. This time, I'm going to use, okay, a stock. The pink line here, look on this a monthly chart. You can see that the price, okay, after it pulled back here, it ran fast, okay? So it ran fast, which means the bullish momentum is quite strong. So Apple stock was going up, okay, without a pullback. In fact, you see, this is what we call a runaway. Just go, boom, 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 boom. But look, as soon as the price reaches the pink line, can you see? For many months, how many months? Can you see here? 1, 2, 3, 4, 5, 6. 6 months, half of a year, the price was stuck below the pink line. Why? It's a very important level. That's why the market acknowledged it. Either it's a fundamental key level, talking about the net asset price, or either, okay, ratio, either key level, fundamentally speaking, or the value of the company itself. Remember, we are not using technical alone. We are combining the technical with the fundamental. When we are using a technical trading strategy, we must go to Google Finance and Yahoo Finance to check the fundamental. This is my recommendation to traders. All right. Finally, as the price goes above that very, very important peak line, what the price did, he pulled back to retest that key level. In 2013, price retested it, the key level, and then from there, it's going up again. This is a high probability trade setup. So as the price ran away from the peak line, we knew that it's a very important level. We will be watching it. As the markets are watching this level, as professional focusing, put all the attention on that key level, it became a very important level. That's how we recognize a very important level. A key level is a level that the market is watching. It's a level where the market put all the attention on. That's it. So as it goes above that very important key level, the key level for Apple stock is in the zone of $420. For the Euro USD, the level that we were discussing was in the zone of 135.00, which the Euro has revisited again recently. 135.00 for the Euro. For Apple stock, is in the zone of 420. That's the pink line here. So as you see, as he ran away from it, the market, the professional will be expecting, they want it to retest it. Why? Because this level are like a magnet. Price ran away from it, it's pulling the price, pulling it. But because it goes, it was a resistance before, now the price break above it, the price must confirm it now as a support level. It's bullish. If it's bullish, this level, a very important level, must now be converted, a very important resistance level, must be converted into support level. How? The primary test it, and the market must check whether it's accepted now as a support level, because before it was a resistance level. Now, as it's confirmed that it's now a support level, we can move on. As the price going up, we must watch at that key level. There's one here where the price is now. See the horizontal line? Apple is approaching that level. All right? So the second demonstration has proved that the market stable data about a high probability trade setup based on the market stable data that stated that if the price goes above a very important level or goes below a very important level, there's a high chance the price may try to retest it. Here I'm using what we call a static support and resistance level. A static support and resistance level is, you can see it's a line that is at a price level. A dynamic support and resistance level, we are talking about moving averages. Moving averages are not static, they are moving. So they are changing. But a static support and resistance level, these are horizontal line like this. All right? It's a key level, one key level for this static key level that we are talking about here is the level of $420 for Apple stock. But when we are talking about dynamic moving average, dynamic support and resistance level, all right, we are talking about moving average. You can check the article that I posted on Ezine article, dynamic support and resistance level. Check it on Google, dynamic support and resistance level. You will see an article written by myself, posted on Ezine article. So second demonstration, true, confirming to us the stable data of a high probability a trade setup. As I told you before, there are many types of high probability trade, but you can purchase a niche trade on Amazon and to find out more about a few of these things, but this is one of them here. All right? The third financial instrument that we're going to discuss is Dow Jones. The level that all professionals were watching this year for Dow Jones, do you know that level? It's the level of 14,000. This is this level, the orange horizontal line here. Everybody was watching that level this year. This is because you remember the attention, all the attention this year was on this level of 14. Do we want to break above 14? And finally, we did exactly, okay, All right, we did this year in February. We went above it. All right, we went above that level of 14. It's so important for the market. Now we are above it. What do we expect? There is a high chance that Dow Jones slowly but gradually will revisit this line. Doesn't mean that sell straight away. You can see that people were trying to sell. Professionals understand. They were trying to sell and bring it to retest it because it's so important for them that the price retest this level. The price may go up for a while, but the market is always watching. So we can say that this orange horizontal line is a kind of equilibrium price level that the price is trying to revisit it. If the fundamental has changed and, we see the equilibrium price level, has been updated, which I discussed on stochasticmarket.com. This is the original equilibrium price level, we may say, because it's a very important level. The market wants to retest this level. But if for one reason the fundamental has improved drastically, and we have a new equilibrium price level, suppose we have a new equilibrium price level here, the price will not pull back to retest the original equilibrium price level. That's a different matter. I do not want to stay away from my topic. I want to stay with the high probability trade that we are discussing here. Price break above a very important level. There's a high chance that the price may try to retest it. So we will expect, in normal conditions, unless the equilibrium price level has changed or the fundamental has changed drastically, the price may go up for a while, but the professional are expecting, this Dow Jones to pull and retest back this level. Some trader will go now and place a trade to sell anyhow without respecting the market patterns, and they will get into trouble. If you want to sell, draw your warning line. Where are you selling? Your warning line. If it goes above your warning line, don't force it. This is how you can minimize and control the risk, the warning line. So the price now above a very important level, the 14,000, will it come back and retest it? We will see. We will not force it, but we know something that there's a high chance that this index, the Dow Jones Index, has a high chance, to retest the level of 14,000. We will see, unless the fundamental has changed drastically. Let's check my time. Maybe I went above my time. I'm already above my 20 minutes. Well, all right. Let's continue. We haven't finished yet. The next financial instrument to demonstrate to traders, this trading strategy is the S&P 500, which is the market itself. First step to mastering a high probability trade based on a market stable data. For the S&P 500, which level the professional are watching? Do you know? Do you trade the S&P 500? Do you trade the E-mini? Do you know the level that they were watching this year? The level is this green horizontal line now. That level is at 1500. Note it down, 1500. For the Euro USD, it's 13500. For Apple Store, it's 420. For the Dow Jones, it's 14,000. For the S&P 500, it's 1500. It's the green horizontal line here. So as the price goes above this very important level, you can see that they try to sell it to retest. It came very close. Some trader bought it again. See here? This month here. All right? This year. Again, they try to sell it again. That's here. There's a high chance that the S&P 500 may try to revisit this level unless we have a new equilibrium price level or the fundamental has changed drastically. We will not force it. All we know that there is a market stable data that stated that if the price run away from a key level that everybody is watching, that all the professional, the hedge funds, the big institutions put all their attention on, there's a high chance they would like to validate this level that was a resistance level before. You can see that the level of 1500 was a resistance level. You see here? Was a resistance. Price went down. Resistance. Price went down. And we came here. Price went down a little bit before going back. You see here? Came near, went down, came near, went down. Here it went near again, and then went down before we went above it. It's a very important level. Using the same market stable data, there's a high chance that we may see this index retracing back to the 500 level. That remains to be seen unless we have a new equilibrium price level or the fundamental has changed drastically. As always, if one is selling, one must draw a warning line. If one is buying, one must also draw a warning line. The next financial instrument that we're going to discuss today is the dollar or yen currency pair, the crazy currency pair, as I like to call it, okay? This time, I will go to the daily chart because my demonstration was mainly on a monthly chart. This time, we'll go to the daily chart and we will see what is happening there. All right? The orange line here for this is a very important, for the dollar yen, it's a very important level. As you can see, what is happening here, ladies and gentlemen, in fact, you see today, yesterday, a few days, you see, all right, you see here, pay attention careful to the orange horizontal line. We went above it a few days ago, and now what's happening? We are trying to retest this level, okay, for the dollar yen. The level is here, okay, the level of 101.78. You can call it 102.00 in the zone of 102.00. Price breaks above a very important level, a runaway. If you see a weakness above that very important level, we will look for opportunity to sell. If the price D below a very important key level and we see a strength, we will look for opportunity to buy because the price will try to retest that very important level. All right? All right? You see now? The level that we are discussing is the high of 2000. Here we are. Hold on, let me remove the line so we can see clearly on this chart. All right? Are you with me? Are you following me? All right? Are you learning something from this? See? This is the high of 2009. All right? Am I right? 2009. That's the high of 2009. Very important price level. From, you see, 2008, the price started going down. And now we are back to the high of 2009. This is the orange line here. As you can see on a daily chart recently, the market decided, as I explained to traders in another video, all right, I will not discuss here this one here. So if you are following us, you know where to find us, all right? So you can see that recently we went above that very important level. There's a high chance that the market may try to revisit that level, which is in the zone of 102.00. We will see. Sometimes the price may run away from it and stay up for a while, all right? But there's a high chance that the market will try to reconvert. So this was a resistance level before, all right? There's a high chance that the market now may try to confirm whether now this resistance is support or not. So if price breaks above a very important resistance level, the market would like to retest it to confirm that this resistance is now a support level, all right? This is about the first step to mastering a high probability trade. I hope you have learned something from this video also, okay? And we'll put it into use to make excellent trading decisions. We are the GSTW 24 traders. Until the next time, enjoy yourself and be very happy. Speak to you soon.